Hello viewers, we'll be going over silver. Today we'll be going over the day-by-day probability model, and we'll go over how we find the models and the forecast model for silver. So back to the technical analysis. Today we are down 13 basis points on the 1-hour chart. We are starting to see a divergence on the 1-hour MACD, and if we were approaching to positive MACD as well. And for the 4-hour chart, we start to see a slight convergence in play. We're still in negative MACD. We are resting on the 200 moving average on the 4-hour chart. As for the daily chart, if we see on the daily MACD, we start to see a divergence in play, and we are currently resting in between the 18-day moving average and the 50-day moving average. So we may find immediate support at the moment. However, if we do manage to break and fall lower, the next support will be around the price of where the 100-day and 150-day moving average coincides, which is at the price of $17.55. And we also have that range where past support were marked back in January 28th and in February 12th. And as for resistance, if we do manage to reverse and head higher, the next resistance that I see is where we left off back early in or last week in February 21st at the price of $18.66. So if we were to head higher, that price movement is roughly around 4.5% to the upside, and to the downside it is around 1.8%. So back to the day-by-day probability model. As the days progresses to the 7th day, we see a 20% chance for silver to climb between 0 to 6%. And on the extreme case, we have a 20% chance for silver to climb between 6% to 13%. On the other hand, we have a 40% chance for silver to decline between 0 to negative 6%. And the extreme case, on the 7th day, we have a 20% chance for silver declining between negative 6% and negative 13%. So let's head down to the forecast model. This is now available in the link below, so do check it out. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to April 18th, 2010 to June 28th, 2010. So let me point out why these two charts are similar. So what we have here in the current trend, we average above the middle Bollinger Band, and then we proceeded to trade sideways and even dip into near the bottom Bollinger Band. Next, we proceeded to make a reversal to touch the upper Bollinger Band. And after touching the upper Bollinger Band, we reverted back to the mean on the middle Bollinger Band. So we have those points there. And in the trend in question, let's examine it. We start to see average above the middle Bollinger Band here as well. And let's just mark that instance here. And then next we take a slight dip at the bottom Bollinger Band next, and then finally we see a reversal to touch the upper Bollinger Band right near the very end, and then we see a reversion to the mean, so right at the end as well. So we have those points there, and what we have here, we have a slight instance where several days we do manage to touch the bottom Bollinger Band, but overall we did average above the middle Bollinger Band, so that's why I marked that there. So what we have is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was April 18th, 2010 to June 28th, 2010. Back then, silver was down roughly around 4.8%. So if we head back to the day-by-day probability model, as the day progresses to the 7th day, we do have a 40% chance for silver to decline between 0 to negative 6%. Again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.